Uh, All right, everyone. My name is Don here. Please type a yes and hear me clearly. My audio is there. Please type a yes. All right. Thank you very much. Thank you very much. So let's get started. So like always, starting off by looking at the fundamental analysis. So that will take us to forexfactory.com. Want to see what we have in store fundamentally. What are some of the events that they being the end of the so I'll be going to Forex Factory calendar together. Then after we are done with calendar, I'll go into technical analysis. Give me a few minutes. Someone is all right. So let me share my screen so that you can look at the calendar together. Okay. So I want to believe you can see my screen. So I'm currently looking at forexfactory.com. Now, we notice that today being Wednesday, the 10th of July, we have very few events scheduled for today. So we have, earlier this morning, we have the interest rate decision on NZD. So the NZD left its cash rates sale. So the previous interest rate was 5.5, and it was forecast to be 5.5, and it remained 5.5. Now, if you look at the price chart, you will see the effects of that particular event market. See how the NZD depreciated massively. That is because of the current situation in New Zealand, almost a recession. There's a recession. It was expected that some and so that is why you notice that even though the interest rate is the same, 5.5, exactly as forecast, NZD depreciated massively. So if you look at NZD USD, you see the massive on in NZD. That is because the economy is in a recession, a technical recession. So and with that, the only solution out will be to reduce rates, to cut rates. All right. So, but besides the NZD, the next high impact news that we have is by 3 p.m. And that's this Chair Powell's testimony, where he will need to appear before the Senate and then give some testimonies for the speech, a very volatile speech. We want to prepare for because this has a massive, definitely have a massive effect on it. Speeches are usually very tricky. So you would have to take with caution. All right. So let's now, so for today, we don't have so much. Don't have so much. Let me see. Try to adjust my audio. I'm getting the reply. I want to delete the audio. So we don't have much on our hands today, apart from the speech by Chair Powell. Just wait until then, and the market will definitely react. But this is all we have for now. Now, the essence of all of this, for him to give outlook about the economy and also their decision whether they have any intent of cutting rates or moving rates. That being said, a lot of volatility. See a lot of volatility in that period. So let's quickly now move over to fundamental analysis. And I also have in mind that this week we have CPI on the United States dollar. That will be on Thursday. So all of this news, this CPI has a way of affecting how the market reacts or how the market moves today. We can keep all of it in mind as we carry out our analysis. So I want to switch over to a chart that we can do technical analysis and then see what we have in store. All right, so I'm sharing my screen now. Give me to share my screen. All right. So I want to believe you can see my screen. I'm going to do. Yes, it's possible that my network is. All right, so this is my screen. So I'm starting off the analysis by looking at the dollar index. The chart we are currently looking at is the dollar index. We want to see overall what the dollar is actually doing. So I'm looking at my current chart is the things what has happened so far for this particular week we are currently doing. If you look closely, you will notice that the index, the dollar index, has been downtrend, has been moving downward. And this is very valid. Valid in the sense that if you look at the data that has been released last week, there's a high possibility that the labor market is cooling off. What we mean by the labor market, the data on the labor data. There's a cooling down in the. And anytime this labor data cool down, and that is exactly what the Fed actually waiting for, then simply means that there's a tendency that inflation will also drop. So we saw the non-farm payroll, saw the numbers that came out from the non-farm payroll. It was higher than forecast, but it turned out to be less than previous. That was why we noticed the movement in the US dollar that week. Number was actually higher than the forecast, less than the previous. And then we saw average earning drop. We also saw unemployment rate increase. Unemployment rate increase. Average hourly earning dropped. Non-farm payroll dropped. Claimant change, claimant count increased. All of this data that is used to gauge or measure the employment status of the United States, they were on the decrease. That in itself tells you that the Fed most likely be considering a rate cut. Because if these numbers are dropping there, there's a tendency that the spending will also reduce. Remember that people spend more when there are more jobs. There are less jobs and people are high unemployment rate is high, then there's a tendency for people to spend less. And if people spend less, then it's likely to affect. And we all know very well that the target is to ensure that it goes down to 2%. So with what we are seeing, there's a possibility that the CPI might also be less or be lower. Very possible. If all of this happens, because from the labor market, we have seen a cooling up, cooling down, there's a tendency for CPI to drop in value. CPI drops in value, then we should expect that the dollar index will continue its move downside. So if you look at it on a technical level or on a technical basis, you can say that we still have more room dollar to go down. If you look at my chart, you notice the red lines or the red levels, the red areas that I have marked on the chart. These are areas where we expect support stance areas. So for the dollar, for this week, remember I said I'm looking at this. This is I switch on to G1. I'm currently on G1. Actually, but so this is our G1. And then for the month of July, if you look closely at the month of here is the movement that we have seen in the month of July. Notice a steady decline downside. When the market steady, and that's dollar index is downside. And also notice that my way of analysis, I normally look at the highs and lows. So you notice that we have moved away from the highest price from last month, that is June high price. We have left June high price. So there's a tendency that we might decline down to the low price. This is what I'm expecting. Movement down to the June low. So this is June low. Point you see here, red line, you see it marked here, is the lowest price. There's a high possibility that we all the way down to that point. All of this will depend on testimony today and CPI tomorrow. So, but for now, we are experiencing weakness in US dollar, which is valid because of the data that has been passed. And then with all the data that we have seen last 2 weeks, it's suggesting that most possible numbers may be down a little. So if that happens, then we should expect a decline. I guess that being said, we can now look at other currency pairs, dollar. If we are expecting a decline in the mix, then at this point we can now look at currency pairs like pound USD. So for today alone, if you look at the chart, notice that we've almost exceeded yesterday's low price. So I'm having complaint about I think. All right, so we've already almost exceeded yesterday's low price. This is low price coming from Friday. Coming from last week rather. There's a tendency we might just continue lower, very possible. Heading towards the low yesterday. So you can see how we are moving away from the high price of yesterday and heading towards, if possible, we might just. That being said, let's quickly look at the store for you. Now on Euro USD, we are expecting the dollar to continue to decline. Then we should expect that Euro USD higher or should be higher. So with that, my volume is finishing minutes. Let's see. All right, please, can you confirm if the volume is okay now? Please confirm if you can hear me clearly. I was getting complaints that the audio is breaking. Please confirm if it's okay. Those that complained about the audio crack, can hear me clearly now, please just let me know. All right, thank you very much. Thank you very much. All right, thank you. Okay, so let me go back to my screen. All right, so we're actually looking at Euro USD. And I mentioned earlier, I was saying before I saw these complaints that I'm expecting the dollar to continue its decline. So we've looked at the dollar index, and we are seeing that technically the dollar has more rooms to the downside. So there's a tendency for the dollar index to continue its decline. Looking at the data that has been released for the past 2 weeks, if you look at the past 2 weeks, we are seeing a lot of information and a lot of data that is suggesting a cooling off in the labor market. And whenever the labor market cools off, it's disinflationary in nature. What that simply means, there's a tendency for it to also affect inflation, that is bringing inflation down. And we know very well that one of the mandates of the Fed is to ensure that inflation falls down to 2%. If that is the case, one of the things that can lead to high rates or high increase in inflation is spending. When people are spending more, and spending more is as a result of or reimbursed labor markets. One of the things the Feds are looking at is labor markets. They want to see the job cooling off. And if you look at the data which has been coming out for the past 2 weeks, the non-farm payroll turns out to be less than the previous, even though it was higher than forecast, but less than the previous. We also see average hourly earning. That is how much people are paid on average per hour, reduced. Unemployment rate, the rate of individuals that are unemployed. So most of these data were suggesting that people will most likely spend less if jobs are tiny. So with that being said, there's a tendency for the CPI to reduce in number. And if that happens, then we should expect that the dollar will continue its decline. This is the dollar index H1. And there's a tendency for us to move continuously to the downside. Because just like I mentioned earlier, I'm just going over this because of the audio problem that we had. That's why I'm going over it again. So if you look at the dollar index on the monthly time frame, that is this one, you notice that we are moving away from the highest price of June. That is the highest price of last month. The position of my cursor is the highest price from last month. And this month, we have moved away from that high price. What we observe about the market is that when the market moves, it tends to move towards these heights, either last month's previous high, last month's high price or last month's low price. So if the market has moved away from last month's high price, there's a high tendency and probability that it's going to move towards last month's low price. And last month's low price is down here, which is down here. So I am expecting the dollar to continue its decline, at least below the low of last month. So if that happens, that will only be possible if the CPI turns out to be negative, and if from the statement of the Fed, remember today we have the testimony of Powell. Now, if from this testimony we are seeing signs of dovishness in speech, that is signs that they are beginning to be confident in the data that are coming out. Once the Fed expresses confidence in the data that is being released, then there's a tendency that they will most likely cut rates sooner than September. Remember that the rate cut is scheduled to occur by September based on polls that have been conducted. The rate cut is expected to commence in September, but there's a way the data will come out, and the rate cut will no longer be September. It will be brought forward. It will now be maybe around August. So if from his testimony there are comments that are suggesting that the data that have been out from last week is okay, then that kind of statement is referred to as a dovish statement. It means that they are already considering a rate cut even before September. Once that kind of statement is made, then you expect the dollar to continue its decline. You can see how the fundamentals plays out on the technical analysis. And technically, as we are looking at the chart, there are no reasons for us to probably be considering a buy on the US dollar, because most of the technical structures that we are seeing on the dollar showing that we are still going down. We are already seeing a market structure to the downside. Market is already transiting the uptrend, and then we are heading down. There's tendency for us to go lower. So if we go over to the Euro USD, now know that if we expect the dollar index to move upward, then Euro USD should edge higher. So on Euro USD, we're looking at opportunities to buy. You can see that for the past few weeks, in an uptrend. I'm currently on H4 time frame. This is H4 time frame. Suggests that each of the demarcations you're seeing on my chart, the demarcation. You can see from 2 weeks ago, Euro USD has been in an uptrend for the past 2 weeks. There's a tendency for us to continue our movement to the upside all the way up to around this area. So I'm expecting Euro USD to hit this area before we can begin consider, a line or a retracement. But before the retracement, my expectation will be that Euro USD will proceed higher all the way up there before, if at all, we now begin to see kind of retracement. So the question left now is, what do we now do with this information? So with this being said, I would prefer to go in for a buy than for. So if you are considering trading Euro USD, it's more preferable, especially at this particular moment in time, to consider a buy and a sell. So for a buy trade, looking at entry from around the region of 1.08070. So what I'm saying in essence is, want to see the market kind of retreat to a support, or we become very confident in the buy. What I mean by that is, I would like to see the market retreat to possibly around this region. So if you see this region, once a resistance announce a support, H1 time frame, I'm currently on H1 time. Your entry, or you'll be considering a buy from around this region. So even right now, as it stands now, there's a possibility for those of us that may not want to wait that long, can go in for an instant buy. Else, what I would love to see is kind of replacement down here or higher. Then also have at the back of your mind that because of this money by trio, there may not be much activities until then, because there are no high impact news markets or scheduled for day. And we know very well that these high impact news are the drivers of the market. They are the drivers of the market. They are the reason why the market moves. So if we do not have any high impact news scheduled for today, apart from the money, then we might just see the market range around this region until that time. So, but for a good entry, I will be much more comfortable taking a buy trade around this zone that you have seen there. So a buy limit will be up. If you place a buy limit here, then your stop loss will be somewhere below yesterday's low price, at least somewhere below this point. So a buy limit around this area is appropriate. Want to see the market retrace down, then I'll place a buy, and then my stop loss will be below here. And then my target will be, I will be targeting TP of at that height. So you can see the blue line I've drawn on the chart. The other blue line that is up. So let me change the color to green so that you can possible target. So the possible target will be that green line, the line that you see above. Yes. Now, but for some of us that might, want to go in on this particular trade and go in at instant execution, if you are comfortable placing your stop loss below this low, if entering from the current market price and placing your stop loss below this low would not cost you so much, then you are good to go. You can do that. Placing your entry at the current market price, taking the entry from the current market price, and then placing your stop loss at around, let me label that red so that you can see clearly. at around this area, if you can take it instant execution and stop loss around this point, then you are good to go. Else, best for us to wait for a retracement around this region before we go in for a buy. All right. So if you have any question on any of the things we have got, feel free to drop your questions in the chat. As the analysis is going on, I'm looking at questions and I'll be answering your questions accordingly. All right. So let's look at NZD USD. Now, NZD USD is one of the currencies that has moved so far for today because of the news that we just received or we just had on NZD. So someone is asking, how do I set up my MT4 on the laptop? Maybe before we end up the class, I'll answer your question. All right, so let me look for NZD USD. All right, so like I said, on Euro USD, I'm expecting a buy on Euro USD. Now, this is NZD USD. So we can see the movement that occurred as a result of the New Zealand bank holding their rates. So they have kept their rates the same. It's 5.5. It was estimated to be 5.5, and they actually did kept it at 5.5. So the surprising thing is, if the rates remain unchanged and was not less than forecast, how come the market dropped massively? Yes, the market dropped because currently New Zealand is in a technical recession. They are already in a recession because of their prolonged high interest rates. The interest rate has been left high for a very long time. What was expected, or what was being expected, was a kind of reduction of the rate. From the speeches, they have mentioned clearly that they cannot be reducing rates when inflation is still high. There's a tendency for the New Zealand dollar to continue on the decline. So for NZD USD, we might just see a continuation of the decline, possibly all the way down to the low that we're experiencing that year. So we can see a decline all the way down here before we start experiencing possible retracement. We might just continue, even possibly down to that point. So if you are buying NZD USD, there's a tendency for us to have it. Anytime we see a massive push like this on the upside, there will usually come a time when the market will retrace. So that retracement would be much better to anticipate a buy from around the region you are seeing. That is for the NZD USD. And a TP, a take profit, will be at around this area. So I'll be expecting a retracement to around this area. If I pull up my feed, my Fibonacci, and extend from high to the low of the current move, then expecting that the market should somehow retrace to around 61.8, exactly this red line. So the red line is possibly the direction where we'll be expecting a retracement to. Yes, but there's a tendency for us to still, proceed down to this area, the shaded area, for retracing a little. We'll continue the downtrend. So for some of us that might want to catch the retracement, might just wait for the market to push down to this area, and then you take in your order, buy order, and then you target that line, which is around, the region around 0.6100, be your 61.8% retracement of the Fibonacci. So that turns out to also be strong resistance zone. At what we have on this side of the chart, draw the shaded line from this side of the chart, you notice that the 61.8% of the Fibonacci turns out to be a resistance zone. One support turned to resistance, that is what we are seeing. All right, so for the NZD USD, the buy will be much more appropriate. Even though we are seeing a decline based on the interest rate, remember that the interest rate was not reduced, it was only kept. So this selling may just be for the interim. And from our analysis, we are already anticipating that the dollar will be weak. So with that being said, can anticipate a buy or a movement to the upside on the NZD USD. So the NZD USD has given us a much more better opportunity to buy. Yes. This move down, I'll be looking for this to buy all the way up 61.8% retracement of it. All right. The next instrument I want to quickly look at is pound USD. Now, pound USD should also give us something similar to Euro USD. So let me open up pound USD. So I'm expecting something similar to Euro USD. The difference is that pound USD moves a bit faster, it's much more volatile than Euro USD. So this is pound USD. Pound USD. So you can see how we have dropped, and today we are almost, we are beginning to edge higher. Same thing we mentioned on Euro USD. I'll be anticipating a buy and not a sell. So I'll be much more comfortable taking a buy rather than selling on pound USD. So let me zoom out a bit. We can see how the market has dropped, created a low, and then we are back on our way up. So some persons might consider this a break of structure, that the market has broken structure to the downside. Remember, we've created a high at this point, created a higher high, and then for this day, we've created a high that is less than the previous day's high. Now, that is on the H1. Now, but if you look at H4, so look at H4. On H4, you can see that we are actually in an uptrend. So, but on the lower time frame, like the H1, it seems we are on our way down. But this might just be a retracement of the move to the upside. It is pretty that this is. Now, if we are buying, we notice that we have this high up here, which is a possible target. I will be expecting the market to move all the way up to around this region before we anticipate any move to the downside. A deep retracement will most likely be possible if the market poke above this high. So if we are able to poke above this high, that is, move above this region, pierce through this region a bit, then we might see a much deeper retracement on pound USD. But before then, for today, there's a likelihood that we might just move all the way up that high, poke the high, that is, exceed the high, and then we retrace. That is very possible. Drop down to a much lower time frame, you can now look for opportunities to jump in on a buy. For pound USD, buy trade, can go in for a buy, stop loss at below yesterday's low. Yesterday's low price, my stop loss will be below yesterday's low. So for the entry point, you would have to check your balance, your account balance, and the lot size you tend to use for your trade. You can also wait for a retracement. Remember that the market may not just move up sharply because there are no high impact moves to cut that effect. There's a tendency, the market might just move up sluggishly. We might just see a sluggish, steady movement to the upside. So which means mild retracements are possible as the market is heading higher. Instead of buying at the current market price, you can just wait for the market to retrace a little, so that it retraces to a point where your stop loss can be placed comfortably without you panicking if the market doesn't move as anticipated. Endeavor to ensure that you are placing your stop loss you're entering your trade in such a way that the position of your stop loss does not give you heart attack or high BP. Ensure that the stop loss is placed accordingly. And from what we are seeing structurally, the most appropriate place to be placing your stop loss will be below yesterday's low price. Down here is yesterday's low price. And decide to wait for a retracement down to maybe around this point, or you take in your buy. Now, if you look closely, you'll notice we have this mild level of resistance turn support area. So, and wait for a retracement down to that region. So that when you place your trade and set your stop loss might just be within range. Let's assume you are waiting for a retracement down to that region. From here to the stop loss is about 15 pips. So you can see that from that area which I have marked to your stop loss should give you about 15 pip stop loss. So for a scalper, 15 pip stop loss is very, very good, very, very okay, very, very good. So also note that the reason why I'm choosing this video is because of yesterday's low price. Market exceed yesterday's low price. That means that the market has created a new low. Market creates a new low, then there's a tendency we might be heading down. So if our analysis is wrong, then the market should break below this low, which is yesterday's low. Then we know that the analysis is wrong. There's no point for us still being in that trade, so we come out of the trade. So our stop loss is best placed below yesterday's low price. If our analysis is correct, the market will gravitate towards yesterday's high price, not yesterday's low price. Once we see movement towards yesterday's high price, means that we are still buying, the market is still way higher. But if the market moves towards yesterday's low price and then exceed yesterday's low, then means the market has just created a new low, which means we have formed lower low. And there's a tendency for that lower low, the market to still continue lower. So you decide where to take your trade. Either you take in as an instant execution from where we are, do the math, do the calculation. If you are entering from where we are currently, and you're placing your stop loss at where I have your math, that would be about 21 pips. Also good. 1 pip stop loss is not bad. Looking for a retracement to this zone, this area which I have marked, then that would be about 15 pips stop loss. All right, quickly, let me rush through the comments and the chat and then see that. All right, so someone is saying do analysis on gold. How do I know what to trade daily without waiting for a signal? Gold analysis, gold. And so someone is asking, how do you know what to trade without waiting for a signal? You cannot just know what to trade if you don't have a trading strategy. You must have something you are looking at. List, something like a checklist. And for you to have a trading strategy, you must find time to attend our classes. We have classes scheduled Mondays to Fridays, and Mondays to Thursdays, in the major cities, Nigeria, if you're in Port Harcourt, in Lagos, Abuja, and Ibadan, any of these areas, there are classes. So endeavor to attend the classes, and then you will be taught some strategies that you will use to identify what to trade. So you cannot just know what instrument to trade if you do not have a trading strategy. Trading strategy is simply a set of rules that you go through every morning. Pick an instrument to trade. I see it is like this. It's like saying, if I see this and this and this, I will buy. But if this and this and this happen, then I will sell it. If I have bought and then this and this happen, I will close my buy. If I place a trade and this happen, then I will double up my entry. So that is the trading strategy. So you cannot just know what to do except you have one. And we teach you to have one. What we want to do is to make sure that you attend our classes. When you come to money market review, we don't teach you strategies. They use analysis that can enable you trades. And if you follow up the analysis, you can also use some of the things we are doing in the money market review. You can also use some of the things we are doing in the money market review, enhance your own trading. To enhance your own trading. So please attend the classes so that you can be taught a very simple trading strategy that you can use to identify what to trade. That's waiting for. All right, so that's the analysis for Pan USD. I'm looking at a buy, and but also have at the back of your mind that we may not see much movement because there are no high impact news The news drivers are the catalysts in the market to move or for the market to volatile. We need these events. We need news. If there are no news, it might be a slow day till 3 p.m. when the testimony will be given. So if you have taken a trade, be very patient with your trade. Don't be in a hurry. Don't be in a rush. And remember, the news we have by 3 is not the data news. So there's no way of actually envisaging or focusing what you might like. It is a testimony. There are several questions the guy will be asked, several things the guy will be responding to. Market will be moving based on his responses. There's no way we can cast it. To say, that's because I already want to place trades without or something moderate. In case of anything, you can easily come out of the market and have your account to trade another day. All right, so I'm getting a lot of response, a lot of reply to look into gold. Yes, there's a way you can watch the testimony. So I personally always watch these testimonies. If you go to YouTube and type Fed testimony, just type Fed testimony live. That is LIVE. Fed testimony live. Take you to where you will be able to watch it live. Very good. It's a good question where you can watch it. So I will encourage that others to watch. And also, as you're watching, watch it. Look at it. And then observe what the man is saying, statement he's making, and also the reactions you observe in the market. That will help you a lot. There's a way to enhance your understanding of all of these things. You can watch it on YouTube. Personally, watch it on YouTube. Just type Fed testimony live. Official YouTube page where you can watch events live and even subsequent events and also watch them. All right, so let's quickly look at gold. Give me a few minutes to pull up gold. All right. Fed. I said Fed. FED. The first one is correct. FED. 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 First one you have. The first is correct. All right. So this is gold. Now take note that gold has been in a trend for quite a while and is very, very understandable. We've been going up for a period of time. Very understandable. Understandable in the sense that the data on the US dollar have been negative, not negative per se. They are not really so bad. Take note that the data itself on the dollar, they are not bad. But what is just suggesting is that there's a likelihood that if the Feds are considering those data, they will be much more prone to cutting rates earlier than anticipated. Expected that they start cutting rates by September, but with the kind of data that has been coming out, they are not completely bad, but if they go ahead, their rate cuts. With that being said, investors will buy gold more because whenever there's uncertainty as to decisions of the Feds, when things are not really certain, investors prefer to save their money or keep their money in gold. That being said, there's a likelihood that we might see gold continue its uptrend. We might not see gold push much higher and then, continue going up. So if you will look at gold on D1, so let me quickly switch the higher time frame. So this is D1 now. Let me zoom this. So you can see from last month, they have already exceeded the high of last month. So you can see how this is last month's high, that is June, the high of June, the high price that was recorded in June. And you can see that gold moved away from the low price of June. This is the lowest price that was recorded. Moved away from that low price. We've also exceeded the high price that was recorded in June. Now you might be wondering why do I keep referring to high prices and low prices, months or weeks. The thing is because from my analysis of the market, I have seen that the market gravitates towards these levels, these highs and these lows, especially the significant highs. For the months, I'm going to be looking at the highest price for the month. The market moves towards these highs. Doesn't move towards the high, then it's going to move towards the low. So anytime you see the market move away from, then just know that it's going to go towards the high. So we've just exceeded the high. Once we exceed the high, we've retraced. So it is normal for this kind of retracement to occur once the market have exceeded a very notable high, a swing high. Take note that this high, which I have marked up here, is a, so we've just retraced out of that high. There's a tendency for us to push higher. Now, for me to be considering a sell on gold, it will be when the market has gotten to around this level. So look at this shaded region. For me to be looking at a sell on, I'll be looking at a sell only when the market has successfully hit that particular level. If we hit that level, then most likely we might be. But for the interim, I will prepare to buy and sell. I switch to what H4. On my H4, you can see how the market has been bouncing off the trend line I have just drawn. This is my trend line. Yesterday, we had a very nice push to the upside, very good movement to the upside, which is and today we are also seeing that we've also begun move. We've also started our push to the upside. So with all of this being said, there's a tendency for us to higher. Now this is H4. Where will I be considering a buy? So if I drop down to, this is M15 now, so if I drop down to M15, I'm a fan of retracement. I will always want to see the market retrace. I am not usually comfortable buying at current market price, usually. So wherever the market is currently, I'm not always comfortable buying. So if the market has moved up the way to, I will not want to buy. I would rather want to wait for a retracement. So how low or how much should I expect this retracement? Now, if we look at this recent leg to the upside, let me increase this. If we look at this recent move to the upside, I would want to see a kind of retracement on gold to around this region. So if I drag my feet from the beginning of this most recent leg and drag it all the way up to the high of that recent leg, so I will want to see gold retrace to around this region. So maybe somewhere here. So you can see the red line. Take note of the red line I'm drawing on the chart. Around this region is where I will be waiting the retracement to. That region is around our 61.8 retracement. So from this area, considering a buy on gold. So in essence, what I'm saying is, I would want to see, now this retracement can happen anytime, it can happen this morning, it's not too far, not a far distance. So I want to see the market retrace to around that region for a push upside. Yes. Remember that trading gold, you want to be very careful, especially with a cap. You want to use appropriate lot size, not going to cause you heart attack when the market doesn't move in your favor. So I'm expecting that gold should trade down. It may not get down there also. I just continue from where it is higher, but I'll be much more comfortable buying from within this area. Or if you know you have a deep pocket and you can comfortably place a reasonable stop loss on you, then you can take your trade from where it is. Now, if you are buying from around this region, then your stop loss should be somewhere below this region. I'll be placing a stop loss below, just below here, I'll be placing a stop loss. You can see that if I'm placing a stop loss below here, then I will want to wait for the market to come even much closer to that area before I can trade. So for gold, prepare a buy. is there. All right, so that's my view on gold. And let me quickly go to questions and see if there are any comments, anybody that has any. All right. So please, if you have any question, feel free to drop your questions. So we are already past 9. This is past 9, 1 minute past 9. So we have looked at a couple of instruments, gold included, and I'm saying I would prefer to wait for a gold to drop before we proceed. Someone is suggesting pound USD. All right. So for pound USD, I think we might still continue our movement to the upside. Pound USD. Sorry, did I say pound? USD JPY rather. On USD JPY, might just continue our movement upside. There's a likelihood for us to high USD JPY. Let's just drop down to a lower time frame. You can see what we have formed. You notice that we've already exceeded yesterday's high price. So this is the high from yesterday. So what that simply tells you is just created a new high. High higher than the previous. There's a tendency for us to continue our movement to the upside. On USD JPY, we might just continue higher. All right, so I think we have looked at trends and that will be it for today. Now, if you have any other questions, always reach out to any of us, reach out to me, that person. Yeah. Can also come to the office and come to the office on things that you do not understand. Also do well to then go to our YouTube page, and then if you miss some part of the analysis, you can recorded session. Those of us that joined in late. Right. So once again, my name is Don. Handling this from backwards. So I want to thank you very much for time. Thank you very much for your time. Thank you so much.